The S&P was lower on the session, down 0.16%, closing at 6644.31, but that doesn't tell the whole story. We gapped down pretty close to Friday's lows right at the open, and buyers immediately stepped in at the 65.50 level. Price rocketed all the way over 100 points up to 66.50 before retracing in the final half hour. Volume in the options market was mostly concentrated between 6600 and 6700, and the game exposure at the 6700 strike remains the largest concentration. And so we think after today's move, if we can hold this level into tomorrow, there's a good chance we could reach that 6700 level by OPEX, which is this Friday. Zooming out to our daily candlestick chart, we are holding this 50-day EMA that's also within the range of our lower dealer cluster zone, the 50-day EMA sitting at 65.42. So bouncing a couple of times off of this very important level. One other note about our lower dealer cluster zone, this is an area where dealers can potentially turn to buyers as option traders close out their put positions. So if we don't see further put buying lower down the options chain, this is an area where a lot of market participants are closing out puts, and that forces dealers to buy back shares of the underlying that they're using to hedge those short puts. And so in the case of the S&P 500, dealers are usually hedging with S&P futures or sometimes with the SPY ETF, but either way, that's going to provide a big boost to the market if put buying does not continue further down the options chain. We were actually talking about the bottom end of this range in our live stream this morning, the 6,500 to 6,550 level. If that breaks, we could see further downside towards the big gamma exposure at the 6,000 strike. That's not our base case scenario for the moment, because that would represent a big break in this uptrend that we've had since April. So our overall base case is that this uptrend will hold and that will continue another leg into year end towards this big gamma exposure at the 7,000 strike. But we need to be aware of the potential risk to the downside should this overall trend break. That's why we're maintaining our hedges in our portfolio. So we've got hedges basically from the 6,500 level on down. This will offer us some overall protection in the case that we do see a big break of that trend. But for now, the trend remains intact and we continue to hold above that 50-day EMA.
Thanks, Anthony. Let's turn our focus to IWM, which showed some early strength today, rebounding before the other indices did, including in yesterday's video and last night's newsletter. We brought up this 250 GEX cluster, and I have our net GEX shown on the screen so you can see just how large 250 is relative to the other GEX clusters. We reached within 40 cents of this target, which that's really close enough for us to consider it tagged. Now, do we get a proper tagging of 250 tomorrow, or maybe even exceeding 250 and heading toward 255? It's entirely possible, and we did see GEX improve from negative GEX to just barely positive net GEX for IWM. So we'll want to keep an eye on this. The biggest issue that I see currently is that we still see decreasing positive GEX above 250. And the question remains, do we reject from this zone and retest 230 or 240 before we rebound and then exceed 250? Or is this basically the end of this correction, and do we continue higher from here with GEX growing at these higher strikes in coming days? We'll be alert to what the 0DTE picture tells us in the morning, and we'll be sure to post that in Discord at the time.
And guys, don't forget, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. And as Sean mentioned, you can also get a sneak peek of what we're watching and what we're trading tomorrow by checking out our community Discord. We'll put links in the description below to all of that so you guys can take a look. Next, I want to turn to Palantir. Palantir up today with the rest of the market mostly lower. Palantir up 1.43%, closing at 179.74. Palantir has seen a pretty large period now of consolidation around this 180 level. This was previous resistance around the upper 180s, which rejected into this 50-day EMA. We saw a period of consolidation right around the 50-day EMA, and then a second period of consolidation, as I mentioned, over the last 3 or 4 weeks. This morning, I think, was key as buyers stepped in right above that 170 level. Gamma exposure continues to remain skewed to the upside from the 180 strike and higher. And so from our perspective, this increases the probabilities of breaking out to the upside out of this consolidation zone. The only question is, when is that going to take place? But what we're seeing is every single day in the options market, volume is skewed to the upside. So today's volume, of course, was largest at the 180 strike, but also large volume at 185 and 190. So overall, it looks like the trend is holding. And as long as that remains the case, I think the probabilities are pretty good for a move through 190 and possibly to that 200 strike by year end.
Let's take a quick look at the VIX. And bulls probably won't like seeing this, but the VIX did make a higher high and a higher low today compared to yesterday. So, we're not completely out of the woods yet as far as this volatility spike and the market dropping. We still have a lot of positive GEX at 25, and we have GEX and volume at 30 and even at 35, which is not unexpected given the trend of the VIX lately going up. And that's not necessarily indicative that we will certainly go up, but it is a risk to be aware of as we look at what happens over the next few days. On the downside, if we see the VIX reach 21 and 20 and then dropping to 19 and 18, you can see there's a lot of positive and negative GEX at these levels that may imply that working through these levels may not be something that happens really quickly. And in fact, that may be a sign that we would look at this area as more of a support. And if the 18 to 20 range is a support level, we certainly want to be aware of the risks to the upside for the VIX. So keep an eye on this, but we will look at the 0 DTE picture across the board, and that typically helps us to navigate, as we start each day.
Thanks, Sean. Next, let's take a look at Nvidia. Nvidia down pretty big today, down 4.41%, closing at 180.01, right above that 50-day EMA. That's the red line on our chart. You can see just how well that's been holding over the last couple of months as Nvidia has retested this a number of times. Gamma exposure still skewed to the upside at the 180 strike. That's the largest gamma exposure concentration on a gross basis, with overall GEX mostly between 180 and 200. And same thing when we look at the options volume, for example, today, all of the volume today was between 180 and 200. And that's a really good sign, even with Nvidia trading lower down to that 180 level. So Nvidia trading at the bottom end of this range, while all the volume is to the upside. And this is significant volume as well over 200,000 contracts at most strikes between 180 and 200. And I actually think Nvidia has held up really well in the face of a number of pretty big headlines. We had the OpenAI investment into AMD that was supposedly going to knock Nvidia down quite a bit. It really didn't. Then we had the China trade war news on Friday, but overall it's still hanging in there, still in this zone that has basically been in around 180 over the last several months. So I actually think this is a pretty decent area to pick up a position on Nvidia. This is going to go to the top of our watch list. We'll be looking for a position into the November expiration, potentially taking advantage of all of this gamma exposure and options volume at the 180 strike and higher.
Yeah, thanks, Anthony. I'm glad you covered that one. I've got Mondelez pulled up. That's MDLZ. Mondelez is a defensive name, and you can see we had early September, I guess it was right at the September 3 date that you see here. We saw a red candle, but it had a very long tail. This may indicate eager buyers at these lower levels, which is still the lower dealer cluster zone, so we haven't made it too far off of that yet. We've been largely consolidating sideways. The last 3 days in a row, we've had green candles. Even with yesterday's candle closing lower, we still saw buying during the cash session, which is indicated by the green candle. And with this large GEX cluster at 250, this includes positive and negative GEX at this level. If we can get past that, the 65 and 70 targets appear to be fairly high probability given what we see with the GEX picture. We have positive GEX at 70 that's concentrated at the December and January expirations especially. And I think this represents a relatively solid proposition for someone that might not yet have a defensive play in their portfolio. and they're looking for a setup that shows solid support with upside potential.
And guys, we are running a limited time promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots remaining, but this promotion is going to be ending soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.